So has the Kitchener-Waterloo real estate market started to slow? We have noticed that things haven't been as crazy over the last 4 weeks. And is this the starting point of our market starting to cool off, or is this just a little bit of a lull before we pick up for our spring market? Don't get me wrong, February was a record-breaking month for the KW real estate market. The average sale price was just shy of $1 million at $988,000, and that was up 6% from January. However, if we look at the beginning of March, things did start to change a little bit. The average sale price dropped to $936,000 for the first 2 weeks. Now, obviously, that's way too short of a time span for us to really predict any noticeable trend. We're still seeing 95% of the homes that sell go to multiple offers, and that's down just slightly, 1% from what we saw in February. However, one thing that we did notice is in the first 2 weeks of March, there were 99 properties on the market that were on the market for over 9 days. So that means that those houses likely aren't going to be going to multiple offers at their list price, and that is starting to increase each week. Right now, the houses that are selling are still going for 28% above their list price. So if you're a buyer, it would be wise to look at the properties that have been on the market for longer than that 1 week period, because there's probably better opportunity for you to get that home without going into competition. The new work from home trend and the lower prices in the KW are still driving a lot of GTA buyers to our marketplace. However, we are noticing that the gap between the GTA and the KW region is continuing to narrow. And there are some businesses that are now encouraging their staff to come back in the office. So that may moderate that trend a little bit. Despite the recent 25% basis point interest rate increase, we still have high demand and not close to enough supply. Now, the Bank of Canada has said that we're likely going to see another between 5 and 6 interest rate increases. So that's something to watch out for. As we continue to see more inventory come on the market, there's a good chance we'll see our market balance out a bit more. Now, that doesn't mean that we're going to see prices drop. It probably means that sellers will change their strategy as we're not seeing as many bidding wars. We're predicting that prices are probably either going to level off or they may continue to increase, but probably at a more modest and sustainable rate. I'm Brad Wild from Go Wild Real Estate, a group of professionals who are passionate about helping people build wealth through real estate. Click the link for the full market report.